Welcome to the Radio Revenue Podcast.
Glad to be here for this one.
Yeah, today we are opening up a remarkably complex and honestly revealing document. We're looking at the 2025 Annual Report, or Form 10-K, for Leidos Holdings, Inc.
Right, specifically for their fiscal year that wrapped up on January 2, 2026.
Exactly. And the mission for this deep dive is to basically demystify the inner workings of what is, well, a $17 billion corporate behemoth.
It's massive.
It really is. I mean, this company quietly serves as both the digital and the physical backbone for the U.S. government.
They really do operate almost invisibly to the average citizen.
Yeah, and here's the thing that makes this so relevant to you listening right now. While Leidos might not be a household name like, say, Apple or Amazon, your tax dollars are intimately tied to their day-to-day operations.
Intimately tied.
Their work touches everything from the air traffic control systems that guide your commercial flights right down to the absolute most highly classified national security and defense programs on the planet.
Yeah, diving into a 10K of this scale can often feel like trying to translate an ancient language.
For sure.
It's heavily layered with financial jargon, accounting principles, and all those dense regulatory disclosures. But our objective today is to bypass the corporate speak, synthesize these raw numbers, and show you exactly why they matter to the broader global geopolitical landscape.
I am so ready for this.
So we are going to examine the structural foundation of Leidos, figure out the mechanics of how they actually secure and generate their revenue, and finally, look at the very real risks they face operating in an increasingly volatile world.
Let's start with the Leidos blueprint, just the sheer scale and scope of this company. When you look at the big numbers, they're honestly staggering.
They are?
We're looking at a global workforce of 37,000 employees.
Wow.
Right. And for 2025, they pulled in $17.17 billion in total revenue.
Which represents a solid 3% increase from 2024.
Exactly. Just take a moment to wrap your head around that figure. $17 billion.
Yeah.
But what really caught my eye as I was going through the notes isn't just the sheer volume of money, it's exactly where that money is coming from.
Right. It's incredibly concentrated.
Yeah.
What's fascinating here is the absolute dependency on a single ultimate client base. The federal government is essentially their financial lifeblood.
Yeah, to put a number on it, a massive 87% of Leidos' total revenue comes directly from U.S. government contracts.
87%. And if we filter those numbers down even further, 49% of their total revenue comes specifically from the Department of War, the DoW, and the broader U.S. intelligence community.
Half the company.
Exactly. That means almost half of this massive $17 billion enterprise is dedicated entirely to the defense, intelligence, and warfighting apparatus of the United States.
It reads like they are practically a shadow branch of the government.
It really does.
And that brings us to the actual people doing the work on the ground, which might be the most unique part of their corporate DNA.
Oh, absolutely.
If you look at a typical massive tech firm in Silicon Valley, you expect a heavy concentration of software engineers. But the Leidos workforce is built on an entirely different level. 38% of their workforce holds STEM degrees, so science, technology, engineering, and math.
Which is high, but then you look at the clearance levels.
Right. A staggering 53% of their employees hold active U.S. security clearances, more than half the company. And on top of that, 19% are military veterans.
Yeah.
Why is that specific makeup so crucial to their business model?
Because that specific workforce composition is a highly calculated, heavily protected strategic asset.
Right.
Obtaining and maintaining a U.S. security clearance, especially at the top secret or sensitive compartmented information levels, is an incredibly rigorous, time-consuming, and expensive bureaucratic process.
It takes forever.
It can take months, sometimes well over a year, just to get a single person cleared. So by housing a workforce where tens of thousands of employees are already vetted and cleared, Leidos possesses an enormous competitive moat.
I see.
When the Department of War needs a highly classified intelligence project spun up immediately, they simply do not have the luxury of time to wait for a new batch of corporate contractors to go through background checks. They need cleared personnel in the room on day one, ready to access classified networks.
Okay, let's unpack this because it really changes how you look at the company as an investment and as an entity.
It does.
Leidos isn't just out there selling widgets or cloud storage or software subscriptions. They are fundamentally selling highly cleared, highly specialized human capital.
Precisely.
They are selling absolute trust, immediate access, and elite brainpower that the government simply cannot recruit, hire, and clear quickly enough on its own.
It's a fascinating way to build a business.
It really is.
And the structure of the business itself reflects how they deploy that elite human capital. To understand the mechanics of their revenue, we really have to look at how they divide their operations. Leidos is split into 4 distinct reportable segments.
Right.
This kind of diversification is how a major contractor insulates itself from the unpredictable fluctuations of any single area of congressional spending.
Let's walk through those 4 pillars of revenue because it gives a great picture of what they actually do.
Let's do it.
The biggest chunk of their money comes from the national security and digital segment. This pillar accounts for 44% of their revenue, bringing in $7.6 billion.
Massive.
Yeah. The report mentions they're using artificial intelligence and machine learning to coordinate sea, ground, air, and space operations for warfighters.
Right.
But what does that actually look like on the ground for a soldier or a commander?
Well, think about the chaos of modern warfare. You have satellites in orbit, destroyers in the ocean, ground troops in a city, and drones in the air. Historically, all those units operated on completely different communication systems. What Leidos is doing is building the digital nervous system that connects them all.
Wow.
They are writing the software and deploying the AI that allows a drone to spot a target, instantly communicate that data to a naval vessel, and coordinate a strike, all in real time across multiple domains. They're integrating the entire battle space into one cohesive, intelligent network.
That's heavy sci-fi level stuff right there.
It really is.
But then they have this completely different side to their business. While national security handles the battlefield, their second largest pillar focuses on domestic infrastructure.
Right, the health and civil segment.
Yeah, making up 30% of their revenue, or just over $5 billion.
Yeah.
The notes show they manage behavioral health services and medical disability exams for the VA.
They also run the FAA's air traffic control systems.
That blew my mind.
And they are the ones tasked with delivering a massive, unified electronic health record system to both the DoW and VA hospitals worldwide.
So what ties all that together?
The thread connecting all those seemingly disparate civil projects is the threshold for failure. Leidos strategically targets critical infrastructure where failure is simply not an option.
Zero fail missions.
Exactly. You cannot have the National Air Traffic Control System go offline.
Right.
You cannot lose the medical records of an active duty soldier mid-deployment. The stakes are profoundly high, and managing that specific type of high-stakes, zero-downtime infrastructure is what keeps the government locked into renewing these massive, multi-billion-dollar contracts year after year.
That makes total sense. You get entrenched.
Deeply entrenched.
Moving on to the third pillar, we have commercial and international. This segment represents 13% of revenue, or about $2.3 billion.
And this one is actually highly visible to the public.
Right. Even if you never noticed the logo. If you have been to an airport recently, you've likely interacted with their tech.
Definitely.
Leidos has deployed over 30,000 security and baggage scanners across more than 120 countries.
The sheer logistics of that physical footprint are remarkable. We are talking about advanced CT carry-on baggage scanners, people scanners, explosive trace detectors.
So it's not just software.
Not at all. They are not just writing code. They are a global manufacturing leader in the hardware used to secure international ports, national borders, and commercial critical infrastructure.
That is a massive physical presence extending far beyond U.S. soil.
It is.
And rounding out the business is the fourth pillar, defense systems, which also accounts for 13% of revenue, or $2.1 billion.
This is their advanced hardware and rapid prototyping division.
Yeah, the 10K lists integrated air and missile defense systems, manufacturing thermal protection systems for hypersonic boost glide missiles, and creating autonomous maritime vessels.
Yes.
When they say thermal protection for hypersonic missiles, what kind of engineering is that?
We are talking about applied physics at the absolute cutting edge.
Okay.
A hypersonic missile travels at more than 5 times the speed of sound.
Which is insane.
Right. And at that velocity, the friction generated by the Earth's atmosphere creates temperatures high enough to melt standard metals.
Just from the friction.
just from moving that fast.
White.
Leidos is engineering the advanced composite materials that wrap around these weapons so they survive the flight path.
Wow.
Furthermore, they're building robotic submarines, these autonomous vessels that can patrol under the sea for months without a human crew, gathering intelligence or tracking targets.
That is incredible.
If we connect this to the bigger picture, you can clearly see the overarching architectural strategy of the company.
Yeah.
Leidos has systematically engineered a state of total operational indispensability.
Yeah.
From coordinating multi-domain warfare on an active battlefield, to managing the airspace for your holiday flight, to physically scanning your luggage, to protecting veterans' health records in a hospital ward.
They are everywhere.
They have embedded themselves into the very fabric of how the modern state functions.
It's brilliantly engineered, honestly. But to maintain that level of scale and keep a $17 billion machine running, you have to constantly win new business.
You do.
That brings us to the actual money flow. How government contracting works is fascinating, because you aren't just adding a missile defense system to an online shopping cart.
No, you definitely are not.
It is a highly regulated, deeply complex procurement process. The 10K breaks down their revenue by contract type, and it's split almost evenly between two major categories.
Right.
Firm fixed-price contracts make up 43% of revenue, and cost reimbursement and incentive contracts make up 44%.
Yes.
Can you break down the mechanics of these two structures?
Sure. Think about how you might hire a contractor to build a house. You have two primary ways to draw up the paperwork.
Okay.
The first is what the government calls a firm fixed price contract. The government agrees to pay Leidos a flat fee, say $100 million, for a specific satellite system. For Leidos, the reward here is higher potential profit margins. If they are highly efficient and build it for $80 million, they pocket a massive $20 million profit.
That's a great day for them.
It is, but it carries significant risk. If supply chain delays or inflation drive their actual costs up to $110 million, Leidos simply loses $10 million.
Ouch.
Yeah, they absorb the overrun entirely.
So they are completely on the hook if the macroeconomic environment goes sideways.
Exactly.
But what about the cost reimbursement side?
That is the second method. With a cost reimbursement contract, the government agrees to pay for the actual allowable costs incurred by Leidos, plus a predetermined fee or profit margin on top.
Ah, okay.
It is much lower risk for Leidos because their costs are covered, but it generally offers lower profitability than a perfectly executed fixed-price contract.
That makes sense.
By splitting their revenue almost 50-50 between these two types, Leidos is carefully balancing their exposure to risk against their potential for high-margin rewards.
Here's where it gets really interesting. Let's talk about the backlog.
The backlog is huge.
This is the total amount of money they have lined up for future work, and the number is a staggering $49 billion.
$49 billion.
Yeah. But the 10K notes that effective in fiscal 2025, Leidos made a specific accounting shift.
Right, they changed their policy.
They changed it to include estimated future revenue on task orders that are expected to be awarded under sole source IDIQ contracts. Now, I know IDIQ stands for indefinite delivery, indefinite quantity, but what does that actually mean for the business?
An IDIQ is essentially a master contract. The government uses it when they know they need a certain type of service over the next 5 years, but they don't know exactly how much of it they will need or exactly when.
Okay.
So they pre-approve Leidos as a vendor. The government then issues specific funded task orders as the need arises.
I see.
What Leidos did with this accounting shift is look at their sole source IDIQs, meaning master contracts, where Leidos is the absolute only approved vendor.
Ah, sole source.
Right. By officially recognizing the revenue they realistically expect to generate from being the exclusive provider, they added over $4.8 billion to their reported unfunded backlog.
It's basically their way of signaling to investors, look, we're the only ones legally approved to do this specific job, so even if the official purchase order hasn't been signed today, we know that money is inevitably coming our way.
Exactly. It's guaranteed future work, essentially.
And they aren't just sitting back relying on this backlog. They are actively out there buying future growth.
Big time.
We saw two huge strategic moves in this 10K. First, in May of 2025, they acquired a company called Kudu Dynamics for $293 million.
Yes.
Why target them specifically?
Kudu Dynamics represents a critical piece of the modern warfare puzzle. They provide highly advanced AI-enabled cyber capabilities specifically tailored for defense and intelligence customers.
Wow.
By acquiring them, Leidos wasn't just buying software, they were rapidly securing intellectual capital. They bought a highly specialized, already cleared workforce that operates in the very niche domain of offensive and defensive cyber operations.
Buying that cleared human capital again.
Exactly.
And then the 10K teased an absolute blockbuster pending acquisition. On January 23, 2026, literally just days before this annual report was finalized, Leidos entered an agreement to acquire a company called Entrust for $2.4 billion in cash.
Huge move.
$2.4 billion is a massive swing.
It's a classic corporate playbook. If you cannot build the technology fast enough internally to meet government demand, you just use your massive cash flow to buy the company that already did.
Right.
The Entrust acquisition is specifically designed to strengthen their commercial and international engineering footprint, particularly in digital security and identity verification.
Got it.
They are acquiring specialized tech companies to plug directly into their massive government contracting machine.
But operating a $17 billion machine with 47,000 employees comes with profound vulnerabilities.
It certainly does.
Let's pivot to the risk factors section of the 10K, because walking this tightrope is incredibly complex. The threat matrix they outline is intense, starting with the economy.
Right.
We mentioned those firm fixed-price contracts earlier and how they lock in revenue.
Well, the flip side of locking in revenue is locking in risk.
Yeah.
Because nearly half of their revenue relies on multi-year fixed-price contracts, persistent inflation, and global supply chain disruptions are a direct threat to their profit margins.
Because they eat the cost.
Exactly. If the cost of specialized labor or aerospace-grade aluminum spikes unexpectedly halfway through a 3-year contract, Leidos has to absorb those costs.
That hurts.
Furthermore, inflation reduces the government's overall buying power. If the defense budget stays relatively flat, but the cost of building defense systems rises, the government simply buys fewer systems.
Which eventually trickles down and hurts the bottom line of contractors like Leidos.
Precisely.
The economic environment is tough, but the regulatory environment is always shifting too. The 10K highlights a major, very recent regulatory shift. It's an executive order titled Prioritizing the Warfighter in Defense Contracting.
Yes, that is a big one.
This has clearly sent ripples through the entire defense industry. What exactly does this order demand from a company like Leidos?
Let's look at the actual text of this executive order. It introduces a massive operational shift by mandating that future government contracts must include provisions restricting a contractor's ability to conduct stock buybacks or issue dividends during any period where the government determines the contractor is underperforming.
Wow.
The government defines underperformance as delayed investment, slow production speed, or failing to prioritize the mission.
Instead of just reading the regulations, think about what this means for the boardroom. The government is essentially saying if your tech doesn't work on the battlefield or you fall behind schedule, your shareholders don't get paid and your CEO doesn't get their bonus.
It aligns corporate financial incentives directly with national security outcomes.
It forces the issue.
That is the exact intent. The order specifically requires that executive incentive compensation be structured contingently, tied to criteria like the on-time delivery of projects and the facilitation of domestic investments.
Which sounds good on paper, but operationally.
From an operational standpoint, the administrative burden here is staggering.
Right.
Leidos not only has to rigorously track and prove its own performance metrics to avoid these financial penalties, but they also have to ensure their vast network of smaller subcontractors are fully compliant.
Oh, the subcontractors too.
A delay from a tiny subcontractor making microchips could potentially trigger underperformance clauses for Leidos as the prime contractor.
It's a massive compliance headache.
Massive.
But perhaps the most ironic risk factor listed in the entire document is cybersecurity.
Yes.
Here's a company that makes billions selling cybersecurity solutions to the U.S. intelligence community, yet they openly acknowledge that they themselves are a prime target.
They're a huge target.
They face daily, sophisticated threats from state-sponsored actors, organized crime syndicates, and insider threats.
This raises an important question. What happens to a company like this when the digital fortress is eventually breached?
Right, because it's not just about money.
No, the stakes here extend far beyond financial losses or a dip in the stock price. They are immediate matters of national security.
Yeah.
A breach involving classified data, proprietary intellectual property, or critical infrastructure systems could result in immediate contract terminations, severe regulatory sanctions, and a total loss of the government's trust.
Game over.
Recognizing this industry-wide vulnerability, the Department of War is aggressively rolling out the Cybersecurity Maturity Model Certification, or CMMC.
I saw that in the notes.
This is a strict, highly rigorous new security standard phasing in between 2025 and 2028. Moving forward, Leidos must continuously prove they meet or exceed these new standards just to remain eligible to bid on future defense contracts.
It sounds like a constant high-stakes arms race, not just on the actual battlefield, but right in their own corporate server rooms.
It absolutely is.
So what does this all mean? When you step back and look at the entirety of this 10K, Leidos is ultimately a mirror reflecting the priorities of the U.S. government.
That's a great way to put it.
You can see exactly where the country is heading based on where this company is deploying its capital. We are witnessing a massive structural shift toward artificial intelligence, the rapid modernization of legacy digital infrastructure, and the integration of wildly complex multi-domain defense systems.
Yes.
Leidos isn't just reacting to what the government needs today. They are actively shaping how the government will fight, operate, and survive in the 21st century.
The numbers tell a deeper story about where humanity is heading, and it leaves us with a final, somewhat profound paradox to consider.
Okay, let's hear it.
Leidos is rapidly acquiring and embedding artificial intelligence into defense software and multi-domain military operations. Their acquisition of Kudu Dynamics is proof of that trajectory. We are accelerating toward an era where AI systems will increasingly coordinate rapid, high-stakes national security decisions across land, sea, air, and space.
Which is terrifying.
It is, but this raises a critical, unresolved dilemma. If an AI-driven autonomous system makes a processing error on a global stage, resulting in an unintended military escalation or a catastrophic failure in civil infrastructure, where does the ultimate accountability lie?
Wow.
The 10K explicitly lists AI as both a major technological capability driving their future growth and simultaneously as a significant operational and reputational risk. It is a fundamental paradox that neither the defense industry nor the modern world at large has fully resolved yet.
A completely fascinating and slightly terrifying thought for you to explore on your own. The future is clearly arriving much faster than our regulations or our philosophies can keep up with. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.